if you're unvaccinated, you might face higher insurance premiums. Calculating risk is what the insurance business is based on. And Hennie de Villiers, Deputy Chairperson of the Association for Savings and Investment in South Africa, says it's almost inevitable premiums will go up for the unvaccinated. He joins us now. Thank you so much for your time. So obviously many more deaths have been recorded, which first of all let's dwell on that a little bit, because that points quite clearly to the 99,000 official death rate being quite a lot lower than the actual death rate.
Thanks, Tally. If we compare the stats over the 3 waves roughly, so the CISA, the insurance industry, collected statistics for death claims from April 2019 until September 2021. Sorry, April 2020 to September 2021. So that was roughly the period across the first 3 waves of the pandemic. Over that 18-month period, the industry paid 1.6 million death claims. So it was significant. We don't have an 18 months comparison, but if we look at the first 12 months, that constituted a 43% increase over the 12 months in the previous year. Over the 3rd wave of the pandemic, that 6 months was a 52% increase over the period pre-pandemic. So it was a significant increase for the industry.
All right, so obviously a lot more people claimed life insurance and those companies had to pay out a lot more. But at the same time, we're hearing this evening that Old Mutual has bounced back to record profit. So why should any of this trickle down to the consumer, vaccinated or unvaccinated at all? Why should premiums be going up?
Well, ultimately, it is also our responsibility as an industry to make sure that we can still be around to pay claims in 20, 30, 50 years' time. And that is really the key aspect, to make sure that even at that, in that long term, we can pay claims. So our regulator also requires us to make sure that the premiums that we charge are commensurate with the risk that we take, so that the companies can remain solvent. So it is not quite a case of that we can use past profit to cover future premiums, because we have to make sure from a regulatory perspective that basically every product that we sell is sustainable.
Now look, I understand that the business of insurance is about calculating risk. And explain to me why you believe that premiums are going to go up and that unvaccinated people are going to have to pay more.
If we look back a little at what happened the last year, so as I've mentioned, it's significant claims that had to be paid and excess claims over and above what was expected. And we've already seen in last year that in group life insurance, so where an employer have a scheme for his employees, for example, that those premiums already went up. Those are priced a little bit differently. Those are priced just on an annual basis. So basically, based on the experience of the previous year, the price for the next year is being determined. And already there we saw an increase in premiums. If one looks at the research and the statistics both here and abroad, it points that especially unvaccinated people pose a higher risk to contract COVID and then pass away from COVID than vaccinated people. So what we are seeing now in the industry is obviously every insurer is different and applies this in a different way because it's a competitive environment. But typically people that are unvaccinated can expect to pay more than people that are vaccinated. The extent of which they will pay more will differ based on that specific company's risk assessment, but factors like their age and whether they have any other comorbidities, other illnesses will play a role. So young people might not pay more at all. Older people might pay significantly more, and especially if they've got comorbidities, might actually be declined for life insurance.
Is there precedence in the industry for this? I mean, for example, do you pay less on your insurance premium if you've got your yearly flu shots compared to people who haven't?
Not for those, but examples of where it is being applied is smoker rates, for example. If you are a smoker, you will pay significantly more for your life insurance than if you are a non-smoker. And once again, that is based on the medical evidence. So typically, we look at the medical evidence, obviously, and then based on that, we might use certain differentiating factors. Another factor is what is known as body mass index. So it's also research has shown that people with a high body mass index have got a higher risk, for example, than people with low or normal body mass index. So you also find differentiating in premiums based on that in the industry.
All right. Well, thank you so much for chatting to us this evening. Hennie de Villiers, Deputy Chairperson for the Association for Savings and Investment SA.